Barrios, Co-President of World Wrestling Entertainment. George, why don't you start things off?
Sure. So, just to provide some context, give an overview of where we are in the business today. So last year we had record revenues of $800 million, also record profitability, record revenues from outside the U.S., where about 30% of the revenues now come from. When you think of WWE, about two-thirds of that revenue is media, and I'll talk about that in a little bit more detail. About 20% is selling tickets to events, and about 15% is monetizing through consumer products. The other prism into the revenue, as I mentioned before, is by geography. About 70% of the revenue inside the U.S. and about 30% outside the U.S. When you look at the media, we talk a lot about kind of the way we think about the media ecosystem, and we create about 1,500 hours of content and put it on 3 different platforms, and we don't put the same content on multiple platforms. We really are very, very focused on tiering the content, and the 3 platforms are paid television, ad-supported video on demand, primarily through the third-party platforms like YouTube and Facebook, and then our own direct-to-consumer network. On the pay TV side, we put our core in-ring weekly content. It's the most important content we create. It's 5 hours of live event content, 52 weeks a year. So unlike the sports leagues, there is no off-season. In the United States, you'd see Raw and SmackDown on USA. They're the number 1 and number 2 shows on the number 1 cable network in the United States. We're also one of the most watched pieces of live content in the U.S. In fact, second last year behind the NFL. Then you have the AVOD platforms. We create about 600 hours just for that. It's clips of some of the long form, but also a lot of original content. For example, we have a gaming channel, Up, Down, Down, that will create about 200 hours of content just for that. We have a Total Divas channel, and obviously the core WWE channel on YouTube, which has about 25 million subscribers. A lot of people don't know, WWE is the number 2 channel in the history of YouTube. So number 1 is T-Series, which is a Bollywood-focused movie channel on YouTube, but we're the number 2 channel, as measured by YouTube, in the history of YouTube. We're also the number 1 sports channel in the history of YouTube. So last year, across all the AVOD platforms, we did about 22 billion video views. So that's the second platform. The third platform, if you think of Raw and SmackDown as the regular season that sits in the pay TV bundle, our direct-to-consumer service, $9.99 a month, available around the world. We'll have our playoffs, the 12 to 14 special live events, including our Super Bowl WrestleMania that happened a few weeks ago in New Orleans. We'll create new content for our biggest fans. It could be documentaries, it could be animation using our IP. We've done reality series. Again, for our biggest fans, you're also able to view the next generation of WWE superstars. So we have a training facility, performance center in Orlando with about 100 talent training to be the next generation of WWE stars. They put on events, we capture those events, and we provide them on the direct-to-consumer. And then we also use it as a place to bring the entirety of our library, including what resides on the other 2 platforms eventually. We window it. I mentioned that we tier the content, but eventually all the content ends up on the direct-to-consumer. So it is the one place for everything WWE. $9.99 a month. We're the second largest sports SVOD service in the world, behind baseball, with around 2 million subscribers, which we announced recently. So that's the media series, really kind of live event content, pay TV, engage next-generation fans, 24/7 storytelling on the AVOD platforms, and then for our most ardent fans, and that's important, it's not for every fan because it's an additional price we're asking you to pay, but for our most passionate fans, the direct-to-consumer service. On the live event side, obviously incredibly important because it creates the media that I just monetized. So we do about almost 600 events around the world, including our developmental league. We create media from about 130 or 140 of those events, and again, that forms the core asset that we monetize in the media segments that I talked about. And then, as I mentioned, also in consumer products, the primary categories being apparel, toys, and video game. Interesting fact, last year WWE was the number 1 action figure in the United States, so more than Marvel, more than Star Wars. As we look to the future, We tell people we feel really good about all our businesses, but we really think the growth comes in the media business. So whether it's continuing to monetize the core content, Raw and SmackDown, continuing to grow our direct-to-consumer service, and also then continuing to deepen our position on the AVOD platforms, both third-party and our own and operated. That's where we see the growth. I mentioned the monetization, that 30% of the revenue comes from outside the U.S. 70% of all the video consumption I talked about, when you add up all those platforms, 70% of all the time spent on WWE video happens outside the U.S. So 30% monetization, 70% engagement. And we think over time that gap closes because a lot of where that consumption is happening is in countries like India or Southeast Asia or the Middle East. And so as those economies evolve, GDP grows, advertising tends to follow that, subscription revenue tends to follow that, and the whole M&E sector in the marketplace grows. And if we can keep doing what we do, which is entertaining people and engaging them, we should do well. The last piece I'll touch on is kind of another prism to look into the business that I just talked about is this digital, social, and direct-to-consumer transformation. I mean, I touch on it as I'm talking about the media, but just to put in context, back in 2010, the company did about $470 million in revenue. About 10% of that was on digital platforms, and about 25% of that was direct-to-consumer. Today, much bigger company, $800 million in revenue. Roughly 40% is coming on digital platforms, and just over 50% is direct-to-consumer. So there's been a very pointed strategy to grow the digital, social, and direct-to-consumer businesses at WWE.
Okay, great. I guess I'll start high level. George, the media world has changed pretty substantially since 2014 when you last renewed your major rights deals. How do you think WWE and its place in the content ecosystem have changed since then?
Yeah, I mean, I think we've continued to deliver, and it's market by market, so it's hard to just give one answer to globally. We have partners all around the world, so Raw and SmackDown's available here with NBC Universal. It's available in the UK with Sky, with Sony in India, Fox in Latin America, OSN and NBC in the Middle East. So, the answer depends geography by geography. In the U.S., we tend to believe that people who can aggregate live eyeballs are valuable. As you mentioned, we've announced that we've said we expect to announce our U.S. distribution strategy sometime between May and September. So time will tell. It's a small market with a small number of buyers, and so we'll see where that goes.
Your current contract with NBC Universal domestically, distributes Raw and SmackDown for a 5-year period, and I think it includes digital rights. Looking ahead, do you see the need for a similar structure? Meaning, could WWE do a longer-term deal, or could you even see splitting the TV and digital rights?
Yeah, the time obviously is inexorably linked with the economics, the length of the deal, as well as how you view the kind of the ecosystem changing. So we're flexible within certain time frames. Wouldn't do probably a 20-year deal, but we would be comfortable doing longer than 5. And as far as the structure of the rights, ultimately, David, the market is the one that determines whether you can do that or not. I think the live content that does it to the greatest degree is the NFL, and it's because it's by far the single largest aggregator of live eyeballs in the U.S. So they're able to do that, others less so. So in essence, you have to let the market determine. Obviously, from a content owner, the more you can slice the rights, the more economically beneficial. Although we take great care in tiering the content in a way that kind of it raises all boats. So we're really cognizant about that. That's why I mentioned that before early on, that we try to be really strategic about what content is in pay TV, what's on AVOD, and what's direct to consumer. Because in our view, with our IP, if we were just to put everything everywhere, we're not sure that's healthy for the ecosystem. So we've got to be thoughtful about that when you think about the rights. But ultimately, the market determines whether you're able to do that.
Just to follow on, I mean, you mentioned the NFL. The NFL and other sports leagues. Part of the reason they've been able to get higher rights fees is they sell their content to multiple partners. Could WWE conceivably split Raw and SmackDown between different companies? And what are the challenges to doing something like that? I know you've had it on Sci-Fi and USA in the past, but that was all on the NBC umbrella.
Yeah, I mean, again, market determines it on that opportunity. From our end, if the question were, or do you guys think that's an issue to split it, right?
Yeah.
We don't, and we have done it before. We think we're pretty good at promoting and moving our viewers kind of from one platform to another. 7 or 8 years ago, it was only from one network to another network. What's changed dramatically, I mean, it's a sea change. We can't overemphasize it, is the nature of social and digital and helping do that. So we've been able to do it before. We would feel even more comfortable doing it today just because we have a direct connection with all our fans, which we did not have 7 or 8 years ago. So our ability to do that, we think it would be, if it made sense economically, if there were partners interested, if we felt comfortable with the partners in question, kind of operationally, we don't see an issue doing that.
Got it. We recently saw UFC sign a deal with ESPN Plus, which is a platform that did not exist even a few months ago. It's only part of the UFC package, but what read-through, if any, do you see for WWE?
Again, I'm not going to talk about any specific partners. I think the interesting thing is, like you mentioned, you said before, the ecosystem is changing dramatically. You just said, here's a platform that didn't exist a few months ago. Obviously, Disney's been very vocal about their focus now on direct-to-consumer, so this, in essence, would be their first major foray. So as a rights holder, an IP owner, I think makes sense to everyone. The more outlets there are, generally the better for you. So we wish them success. Obviously, as a direct-to-consumer, someone who's been doing direct-to-consumer now, video for 4 years, we're well versed in that business. So we're also looking at ESPN Plus specifically as a product just to learn from it. We think Disney is incredibly smart. Everything they do tends to be done well. So, and I think that I'm a subscriber to the ESPN Plus product. I think it's great. So just internally, operationally, we're seeing what we can learn from it.
Got it. That deal, I guess when you think about it, while lucrative on a per fight basis, probably the flip side is that UFC might be distributing potentially to a smaller audience, at least relative to TV. When you think about your own content, how do you balance, potentially lucrative fees from digital against things like audience reach and engagement?
Yeah, we talk about that whole issue of, what's the purpose of a piece of content and where does it go? It's kind of this delicate balance. And it's probably the most difficult strategic question that we're always wrestling with internally. So when we create Miz and Maurice or Total Divas, well, should that go on direct-to-consumer? Should that be on the AVOD platform? Should it be on pay TV? And ultimately, you're making that decision by looking at 4 things. Number one, in terms of what's the content main goal, is it to bring in new fans, so fans you don't have today? Is it to deepen engagement with your current fans? Is it to help monetize other parts of your business, so promotion? Or is it direct monetization? All right, so those are the 4 things you're always thinking through. So when you ask the question about the trade-off of for ESPN Plus, the early days you're going to be trading off distribution. The economics, at least from what we saw, and again we only saw what was public, seemed pretty good. So I'm sure UFC is thinking through those trade-offs. It's what we do. So long-winded way of saying, would we consider making trade-offs like that, one versus the other? Yeah, we do that all the time. And so, but it's got to work in the whole. So if you're going to, in one example, lose distribution to gain more economics, you have to have a strategy around how am I going to engage fans that I may not be engaging now. And that, again, that's why the social and digital for us is so important. 6, 7, 8 years ago, the answer would have been, don't know how I'm going to do that. Today we know how to do that. So that's why it's really important. So it gives you more flexibility.
Just sticking with social and digital, you recently wrapped up the Mixed Match Challenge on Facebook. How'd this series fare relative to your expectation, and do you see potential for producing new shows for the Watch tab, or could you even utilize some of your existing network programming that had that spot after SmackDown, like 205 Live?
Yeah, so it's funny because everybody asks, and it's a natural question, so how did it do versus your expectations? And of course, you're doing something for the first time ever, so it's hard to have any expectations around it. And I think that goes for Facebook. I think if you ask them, because we did, what would make this successful for you guys? Because obviously that's a really important thing for us. And I think they're still determining, what success is. We know what the metric is. It's time. So it's how many people are you reaching and how much time are they spending. I mean, that's easy. That's what we measure, and we're kind of super intense about measuring time and making sure we have our arms around that. So having said that, we've taken Facebook's lead, and they seem to be really happy with how Mixed Match Challenge was, or how it performed. So in turn, we are too. We learned some things. We learned some things around the scheduling. We learned some things around the promotion, both within Facebook and externally. And we saw kind of the viewership get impacted by different things we're trying. I think we're in early days. I remember someone in an early meeting with Facebook around Mixed Match Challenge said, look, our goal is to reinvent TV, right? TV, which means kind of the viewership experience. So I don't think we've done that with Mixed Match Challenge. I think we did some interesting things on how we embedded the social feed in it and so on, but I think there's a real opportunity to kind of push the envelope over time and do things. And if Facebook were interested in the future, we like those guys and girls, so we would move forward on doing something with them.
I think it was reported that there might have been a revenue share element to the deal. Do you know kind of what the ad load was that Facebook ended up showing against the content? I think it was after the first few matches.
Yeah, it was more structured as a rights deal,
right?
Not a rev share. So we don't have a ton of visibility into the ad load. Kind of similar with YouTube, you can get some understanding, but again, our understanding from the Facebook team was that they were happy with how things went.
Okay, outside the U.S., you're set to renew deals in the U.K. and India. For domestic investors who are less familiar with those markets. Kind of the same as my first question, how do you see WWE programming as, positioned to the last time you renewed those deals in 2014?
Yeah, they're different markets. So UK, a little bit more similar to the US in that it's going through this transformation around multiple platforms, and kind of the incumbent platforms are dealing with that transformation. Maybe not to the extent that you talk about it in the US, but there's still elements of that. Historically, we've been with Sky for about 25 years, so they're a longtime partner, a great partner. We're fairly tiered up in the Sky platform, so the consumers actually has to pay quite a bit to get Raw and SmackDown. It's probably the place in the world where we're the most tiered. Obviously, one of the things that's happened over the last 12 months or so is that Amazon has started bidding for and has acquired exclusive rights, so not just digital rights, but actually exclusive rights to the content. That's something new in the media sector, and they've done it, I think now they have 3 different packages, if I'm correct, in the UK specifically. So that's a kind of an interesting dynamic. So similar to, we're not going to talk about what we're expecting on the right side. What we've said is we expect to announce our distribution strategy towards the end of this year. So we think we'll probably announce it after the U.S. And then in India, very, very different market. Obviously, we've been in India over 20 years. Currently are with Sony, has our rights. I think the really interesting thing going on in India over the last 12 months as the price of broadband has plummeted. So Reliance Jio, mobile broadband provider, is in essence disrupted that market with broadband pricing, which has now created this huge new consumption wave on mobile devices. So you'll hear people in India, and we were just there, talk about the next billion users in the country, maybe closer to 500 million, coming on those devices. That then has led Reliance Jio and some of the other mobile providers to begin acquiring content. So that's new in that marketplace. So that's an interesting dynamic for us as a rights holder. Wrestling, WWE is one of the most viewed content in India. IPL is by far the largest. If you're not familiar with India, the analog would be the NFL here. Kabaddi, which is another sport, does well, but here over the last few years, we've either been the second or third most watched property in India. So we do well in getting. It's our largest country. When I talk about those media platforms, I mentioned time. We'll do 5 to 6 billion hours of total time spent with our content. Our largest market, not per capita, but in total, is India. So it's an important market for us. We've done well so far, and we'll see. We expect to announce the distribution plans there somewhere in the first half of next year.
And does that broadband dynamic in India, lower pricing, open up, guys like Facebook or Amazon or even Hotstar to kind of come in and be more aggressive with content also?
Yeah, look, we think so. I think if you look at Facebook's activity in terms of trying to acquire live rights, the most aggressive bid that I'm aware of was in India. And it was for digital rights. It wasn't for exclusive rights, but they bid, I think, $650 million over 5 years for the IPL rights. And to the best of my knowledge, we had never seen that large a bid for any type of content from Facebook. So it seemed to show that they were serious. But you mentioned some of the other big players there, like Hotstar, which is an indigenous player, and YouTube, of course. So it seems like these new entrants are becoming more aggressive in competing.
Just sticking with international, I want to ask you about the Saudi deal, and maybe you could provide some history for us. How did you first kind of develop a presence in that market, and then how do you grow that to the point where you're staging a tremendous production like the Greatest Royal Rumble?
Yeah, it's interesting because everything without context seems like a one-off. 7 or 8 years ago, we were talking a lot about our focus on the social and digital platforms. And at the time, because we were in the middle of our transformation, people said, well, you're talking a lot about it because you want to distract people from how the business is doing because we're going through this pretty big transformation. We said, no, not really. We're talking a lot about it because it's the most important thing we're working on internally. And I think the story I'll tell is I do remember the day that Vince kind of brought his top team into a small conference room adjacent to his office. And he said, hey, starting this Friday, every week I need everyone in this room to write me a one-page summary of what you did this week to drive social and digital engagement in every function in the business. And it was this notion that this was going to be transformational and we couldn't dabble in it. We couldn't just spend some time working on it or delegate it to someone. It had to be the absolute mission of everyone in the company. So you fast forward 7 or 8 years later, in case you don't know, Saudi Arabia is the #1 country per capita for YouTube consumption. So it is a heavy user of YouTube. And it's something we've been looking at and watching for multiple years. We have a great partner in the Middle East, a paid TV partner, OSN, great partner, but we don't have great free-to-air distribution in the Middle East, so broad distribution. So our vehicle to build and engage the fan base in the Middle East at the biggest scale has been YouTube and Facebook. So then you fast forward and Vision 2030, MBS's vision for Saudi Arabia comes about. Their entertainment is part of that vision. Sports is part of that vision. So as they're looking around and saying, well, who are the biggest sports properties in Saudi Arabia? Guess who rises to the top? It's WWE. And then, in essence, that leads to a discussion, which then leads to a 10-year partnership, which then leads to doing the first time we've ever done a WrestleMania scale production anywhere other than WrestleMania, let alone outside the U.S., let alone in a place who has never done that type of production. So it was incredible. We, in essence, brought every piece of equipment and every piece of talent to operate that equipment into the country because it had never been done before. They've done large events, soccer events and so on, but it doesn't have the production value that you'd have at a WrestleMania scale. And I always tell people, at least for us, I still get chills if you go onto our network app. That's where the Greatest Royal Rumble's available outside the Middle East. And you see, it's a sold-out King Abdullah Stadium, so 40+ thousand people kind of having, what seems like the time of their life enjoying WWE content. And to be able to put smiles on people's faces in these different parts of the world with different cultural mores, and we don't take that for granted. So it was really exciting. So that was the context really was something that began 7 or 8 years ago, and this is just one manifestation of that social and digital strategy bearing fruit.
And do you see an opportunity to kind of run that digital and social playbook in other markets like China potentially?
Yeah, we're doing that today. Yeah, China's interesting. It's probably one of my personal biggest regrets is that we weren't as aggressive on the indigenous social and digital platforms in China 7 or 8 years ago as we were on the global platforms. And part of that was just you had to make trade-offs. It wasn't that we didn't think about it. It's just you're making trade-offs and making choices. We've now, for about the last 3 or 4 years, ever since we signed our exclusive deal with PPTV in the market, had really been building up the social and digital talent in the market to try and grow the same kind of scale as we've done elsewhere. So we're early days in some ways, relatively speaking, in China. But yeah, other than that, where it's a little bit earlier, the social digital playbook is being played out around the world today. What we've said is what we will continue to do is invest in those. And that means more content, so creating more hours, and it also means being more aggressive in localizing the content, more languages and so on. So we will continue to do that.
Got it. I think you said that once you have clarity on your TV deals or your major TV deals, you'll update investors on your long-term financial outlook. When you look ahead, what are the key areas of investment for WWE, and how will your cost growth be impacted by the renewals?
Yeah, we'll determine kind of our investment levels based on finalizing our distribution plans for Raw and SmackDown globally, and we should have a pretty good idea around the vast majority of that distribution by sometime in the middle of next year, once our plans in India are solidified. But we anticipate that we're going to invest in 3 areas, and they overlap. One is data and technology. As we become more digital, social, direct-to-consumer, kind of that data stack becomes incredibly important. It is today already. Second is in creating more content, more video. Again, we're all fighting for time. We stole the line from Reed Hastings. We compete with everybody and everything, including sleep. So that really resonated with us internally. So we're shameless stealers of good ideas. So we're going to keep creating more content, and then we're going to localize. It's this 70% of consumption happen outside the U.S. We think there's just a real opportunity to go even deeper. So you'll see investments in those 3 areas, and things will come together. So people have asked us, you guys have started dabbling with local content. So we did a UK championship last year that we put on WWE Network. So that was all UK talent, not the talent that you see on Raw and SmackDown. And we ran a tournament in market. And people have said, is that part of a bigger idea? And it is. It's not a one-off. We're testing, we're learning, but the opportunity, we think, again, because again, 7 or 8 years ago, if you had a new piece of video, you had to find another party to put it on a constrained platform, 24 linear television platform. That was the only way. Today, and I can't emphasize this enough, we create a piece of video, we can put it in any broadband-enabled home in the world. So the opportunity to do more video has grown exponentially. So when you see us do something like the UK Championship, it's not the one-off of the UK Championship. It's just really learning about the opportunity to create localized content, maybe with local stars. And we like what we saw last year. So when we talk about investments, things like that.
I want to ask you on the network. It's now in its 5th year. You're distributed, I think, in almost every market in the world. It seems like the next big step up in growth may come from personalization, localization, or tiering of the market of the network. What opportunities do you see both at the high end and the low end of the market, and what are some of the risks to be aware of when you're going to be adjusting the product potentially? Yeah,
and you mentioned when you talk about investment and you focus specifically on the network, on the data tech side, it is about personalization. So we think there's a real opportunity there, and again, that's not a new thought. It's just you asked what the company's trying to achieve financially is we're trying to invest for the long term while continuing to grow and expand in the short-term profitability. So you have to make choices. But we think on the data and technology and product side, personalization is a big opportunity in the network. You mentioned localization. Today the network's available everywhere in the world, but it's a U.S. product. It's in English, U.S. currency. We feel pretty strongly that localizing it gives us opportunities in the markets where it's already available to go deeper and grow the network another level. And then finally, I mentioned the company's overall businesses, tickets, video, product. That's the way, in essence, that we touch all our fans. And we think there's a way to bring all of those things together in one place. So we've talked about the notion of tiering the content, tiering the network, having maybe a premium tier where you can bring a lot together and make it easier for our fans to interact with us, who are our most ardent fans. We also think there's an opportunity on a lower price or free tier as well, just giving people a place to engage with more content that helps grow the overall service. So yeah, we're excited over the next couple of years. And you mentioned all that change. There's inherent operational and executional risk within that. It's one of the reasons we've taken our time. I know investors have asked for a long time, when are you going to do these things? And we've said it's coming. And part of it is there's a business model element to this. You have to be smart when you tier, because if you do it the wrong way, it becomes cannibalistic as opposed to accretive. So there's the business model element, but there's also the product user experience. So we wanted to take our time and learn, and we've been doing a lot of that for the last 4 years. So here, I think in the next year or two, you'll see some changes that we think are going to be beneficial.
With your new reporting structure, you started breaking out a separate revenue line item for advertising and sponsorship, which appears to be growing at a really healthy rate. Can you help us unpack what's in this segment, both in terms of traditional sponsorship and then digital advertising, and what's sort of the growth driver, among those two?
Yeah. So if you think about media, the rights to a lot of the advertising for our most valuable product, which is Raw and SmackDown, are given to our partners who pay us a license fee. So that means the assets that we're left with on sponsorship and advertising, and you touched on them, are primarily the digital and social assets, as well as the overall sponsorship with the brand. And both of those have been growing. But there's no doubt that the digital and social and YouTube specifically have grown dramatically over the last 6 or 7 years. So that's been a big part of the growth drive. But all elements have, including the sponsorship, have shown some nice lift. So yeah, when we reduced the number of segments, we started giving a little bit more visibility into the secular revenue line items, including that one.
And on the digital side, is that growth coming from just more content, more ad, more places to sell ad units, or are you getting higher CPMs on that also?
Yeah, it's a little bit of all of it. So you're driving more hours that we are putting out there, more engagement is happening, and CPMs are improving. I always tell people, when you think about our digital advertising, because 75% of that consumption is happening outside the U.S., you have different levels of CPM. So the CPMs in India are very different than the CPMs in the U.S., as are the sell-through rates. So those are still kind of in lagging U.S. metrics, but we expect that to change over time, again, generally as the economies grow. But you've seen growth kind of across all the key levers.
Okay, we have a few minutes left. I want to open it up to the room over here.
George, with Disney's recent acquisition of BAMTech, does that change your guys' thoughts on using BAMTech's platform for your OTT products?
Not, I mean, it's an input into the decision making, but if you look at our video supply chain, we use multiple partners, whether it's Encompass or NEP or BAMTech, Funware on the mobile app side. So we use multiple providers, and BAMTech's part of that video supply chain, but I wouldn't describe it as a strategic part of it. So we're always evaluating every vendor to try to improve the product. So I wouldn't say the acquisition's a huge part of our thinking, but it goes into it.
Any others in the room? Just on the network, I know I've asked you this in the past, but some of the other media companies we talk to always talk about the benefit of distributing their subscription services through an Amazon or a Hulu. I think domestically you're still all direct. Do you see the potential to distribute through a wholesale partner?
Yeah, I mean, we talk to people continuously, actually around the world, and what I always have said, David, is it's a combination of what the economic relationship is, it's the user data, as well as the consumption data. So we've got to balance all that. We're a little bit different than a general entertainment network who needs reach and needs to be available in multiple platforms. I always mention our direct-to-consumer service are for our most passionate fans. I'm not trying to get someone who's not a WWE fan to subscribe to WWE Network. That's not going to happen. What's going to happen is I may bring in a new fan who starts watching Raw and SmackDown on YouTube or sees it on USA or Sky. They become a fan and they say, boy, I've got to get WrestleMania. Yeah, I'm going to get the WWE Network. So the value of being on one of those platforms, I think there may be some incremental value, centralized billing and so on, but not so much so that we're willing to make kind of significant, at least today, significant trade-offs on those other things, economics, the user information, the consumption data.
I've got time for one more. Interesting note in your 10Q is that WWE sold the naming rights for the XFL to Alpha Entertainment, and I think in exchange you got a minority equity interest in the new XFL. I know there's no financial obligation for WWE to XFL, but high level, thoughts on the endeavor?
Yeah, look, I'm a huge football fan. It is the 800-pound gorilla in terms of video consumption in the United States. It's the sport with the biggest off season, so there's no football, college or pro between the Super Bowl and kind of September 1. So it looks like it's a really good opportunity. I think it will require significant capital. So when we WWE looked at it, we said that's a pretty big level of investment at venture type risks, and it probably doesn't fit in a public company of our size. Vince has the capital to do it on his own, so that's how Alpha was formed, and then we struck a deal on the marks recently, like you mentioned. So I'm excited to see him have another big success with the XFL.
All right, George, thanks for coming.
All right, thanks for having us.